Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Happy Friday. Good morning. Good afternoon. Welcome back to another live stream. Hope you're doing well. And it is Friday in the office. We've got a mixed in terms of open and closed markets today. The Forex market is, of course, open, crypto market open, but then you have futures obviously closed, futures in the stock market closed. Figured today would be a great opportunity to do some more of what we've been doing on the streams recently, which is answering some questions from you guys, as well as discussing a little bit more strategic. I mean, I actually love days like this. I see some people saying, why are we live today? What's going on? Well, one of the big things is that before I kind of went full into trading and YouTube years ago, before I did that, I would take these types of times where you may have a shortened work week, or you may have more time flexibility. These would be days where I would make significant progress in my trading. A lot of people take these days as days to take off, and that is totally fine. Like days where in the US, we don't really do that, but in other countries, I know other people might be out of work for today or something like that. But anytime you get that extra availability in your trading journey, I think it's really, really important that if you can and you are willing to make the sacrifice, those are days where you put the work in, right? I used to spend so much time on days like this where like school would get out for like snow days, or we would have like a holiday, or for whatever reason, I would take any excuse to go back test, go spend time studying this stuff, because that's how you're going to get to a point where you're profitable. I have a, sneaky suspicion that most people here have pretty busy lives, whether you have a spouse or a full-time job, or you're a student, or you're looking for a job, or you are whatever's going on in your world. It's a good chance you're busy. When you get time away or any extra availability, it's a huge opportunity, if you are not where you want to be with your trading, to take that time to get ahead. Do you need days where you take rest? Absolutely. But I actually think this might be, for many, the type of day where if you take advantage of it, it could be an incredibly useful day. What I mean by that is you're not trading the market per se. If you trade like gold, if you trade Forex, the market's open. We got stuff moving. If you're looking at euro or pound or dollar yen, things like that, these charts are still moving. But if you trade gold or you trade NASDAQ or you trade something that is closed today, this is a great opportunity to do some back testing, to do some studying, to do some stuff. We just dropped a link in the chat. Thank you to Chandler for doing that. If you guys have any questions during the duration of the stream, I've got something fun. Also, Netflix earnings yesterday. Yeah, they were good, man. Netflix is a stock that I want to own, but have not, didn't quite get to where I was looking to buy it, right? Actually, I mean, I quote unquote, this is a word you should never use, but I should have bought it when it went down to 825. They had crazy good earnings. In my opinion, this is one of the best stocks in the stock market at this time. Why Netflix? Well, Netflix, correct me if I'm wrong, for people who, the Netflix people who know a lot, I'm pretty sure it's $7 or $8 as a minimum that you can pay per month to access Netflix's library. I think that's the ad tier. Somebody correct me. I don't know enough about the different Netflix tiers, but $7 to $8. I want to talk about why this is such a good stock in my personal opinion, and why I would love to get an opportunity to buy this stock at a discount. If we enter into a recession, I actually do think that Netflix is pretty resilient in a recession. What I mean by that is that, people cut back their spending if markets get ugly, if times get tough, right? It's pretty natural. People get, they consider what they're spending money on. But here's the thing, more or less same here. Okay, yeah. So I think it depends on where you are. They have different pricing and stuff like that. But the point is, let's say for like around $10 a month, let's just be safe. As a minimum, people can keep their Netflix subscription. And the reason that matters is because for just $10 a month, people are unlikely to dramatically switch off their Netflix. We actually saw that in their earnings. There was not a huge, they had great numbers, right? So the point is, people might not go on a vacation, but people still want to be entertained, and maybe they'll just stay home and watch Netflix if times are tough, right? So I think that you have this really interesting story with Netflix, which is basically, this is a company that, in my opinion, I would love to be long this name, because even if you do enter a prolonged period of struggle, I still think Netflix is going to do okay in that, right? Do you watch Netflix? When I really don't have a lot of time flexibility to be honest, I really don't do, I don't watch Netflix that often, but every once in a while a good show will come on. I just, a couple or like weeks ago, my wife and I finished watching Severance, which we loved that one. That was on Apple TV. But no, I don't watch a lot of television. But when like Squid Games drops, I'll watch that. Like if something huge is out, like Stranger Things, like I'll watch some stuff, but I don't watch, like I would say I'll watch for like 1 week out of every few months, and then just not watch anything. I actually prefer movies for that reason, because I just don't have a lot of a free time. I don't have available time to watch shows. What I like about movies is I can go to the movie and it's like a 3 hour or less commitment to like see a story, and then I can walk away, and I feel like I got that enjoyment out of it. It's personally why I actually prefer movies. Shows I'm just not able to consistently dedicate time to. Outside of trading and live streaming, what do you tend to get up to on a day-to-day basis? Well, typically my life recently has been kind of boring. I've been doing a ton of work. So like software dev stuff constantly. I'm trying to become a better YouTuber this year. So I've been learning more about like how to create better thumbnails, how to optimize your videos, how to make the viewer enjoy the video more, how to take feedback from viewers to improve your videos. So I've been doing a lot of that stuff with work. And then obviously I have a staff that I manage. So outside of work, I have a quote unquote day job with A1 Trading. And then on the weekends, I've been doing a lot of like outdoor stuff. I bought a home. My wife and I bought a home last year. So I'm like this weekend, I'm going to be doing a lot of pressure washing. I'm sounding like so boring, and I love it. I'm getting to a more boring stuff. You want a daily routine video? It's not glamorous. It's not going to be beaches and, sunsets. It's usually I'm up early. I drive to work, plan videos. Yeah. Anyways, let's jump into some questions. If you guys have trading questions, please feel free to drop them. We've got a couple already. Got our first question here from Migress. Hopefully I said your name correctly. Their primary goal right now, and by the way, if you would like to ask questions, maybe we could drop that link one more time. It also, I think we added it to the default description. It may be in there today. It may not be in there. No, I don't think it's in there today. But in future live streams, when we update those, it should be in the description as well. But for now, you can ask a question right here. So if you have questions, feel free to ask them there. They're in the chat. I'm going to go through this first question. So Migress has been trading for 1 to 3 years. Their primary goal right now is to improve trading psychology. And I've been trading gold using support and resistance to get in the market operation. I've been right on prediction most of the time. I use RSI to know when it's oversold and overbought. And I've been watching the fundamentals before entering, like the Commitment of Traders report, CPI, Trump ideas, trade wars. But I feel that I need to learn more. What is an advice you can give to learn? So it sounds like your question primarily revolves around, and I've got these questions pulled up here. Like I said, if you ask a question, it will be populated in here, and then I can discuss it on stream. So please feel free. Let's use this time today to do some discussion. I think that might be beneficial. So if you have your coffee ready, if you have your drink of choice, your snack of choice, whatever, sit around, hang out with me. Let's talk some strategy and let's work on our trading. Even though you have some markets closed, some open today, you've got Forex open. We can do some discussion. I think that'll be really, hopefully, beneficial to everyone. So your question sounds primarily like you're good on the technicals, right? You've said trading support and resistance, using RSI to confirm oversold and overbought. Very nice. Like that's simple. Like if we can keep that straightforward on the technical side. Now on the fundamental side, right? You're talking about COT report, CPI, but you feel that you need to learn more. What is the advice you can give to learn? So the biggest piece of advice I could give you. So I mentioned that for me personally, one of the things I am looking to improve this year is my YouTube, right? So if I go to my channel and I go and I say playlists, right? So I would encourage you to go find, let's see, where's the playlist I'm looking for? Well, there's plenty of topics here, right? Risk management, whatever you struggle with, I would encourage you to go explore this page. Just head over to my channel, go to playlists. There's a fundamental analysis one in here somewhere. Trading explained. There it is. Macro fundamentals explained. If you want to go through some videos that I've done in the past about fundamental analysis, that is a great free place to start right now to learn a little bit more about fundamental analysis. So the big things with fundamental analysis is the core things that we talk about often on the channel are going to be focusing on key metrics in the economy that revolve around growth of an economy, inflation within economy, price stability, and labor data statistics. Okay. So we want to learn a little bit about how we can better diagnose, if you will, how growth statistics, how inflation and labor statistics are looking. Because once you get good at spotting those trends, the charts start to make a lot more sense, right? When you start recognizing why the dollar might be strong or weak, or you might recognize why the stock market may be due to go lower or higher, that understanding can take you a very long way. So I hope that helps, but check out the playlist section. If you don't have, even if you don't have the EdgeFinder, I also want to show you another resource. So if you are somebody who is like, yeah, I relate to that question, I want to learn more about fundamental analysis, I've got some great free stuff for you on our website that our team has done a remarkable remarkable job putting together for many of these common questions. Head over to a1trading.com. I've got two things to show you really quick that are completely free resources to everybody here. Head over to A1. Again, that's a1trading.com. And then go over to courses. So we don't sell a course at A1 Trading. It's all free on our website. I would encourage you to head over to a1trading.com. Under courses, you can go through our technical analysis, fundamental analysis, or our options trading course. It's completely free to do. The other thing is if you go to under EdgeFinder, this is an EdgeFinder tutorial, but it's also very useful just for understanding fundamental analysis. You can get a better idea of how, our economic heat maps, what we're looking for, what's the strategy, what are we trying to determine when using the EdgeFinder, right? Obviously, the EdgeFinder is our macro fundamental analysis sourcing tool. Like at the end of the day, this thing just makes fundamentals easier to grasp, understand, and track. So you can go through all this stuff and you can basically spend some time reading. I mean, we have put together a huge resource here completely for free, how we score things, how we make trading decisions. All of this is available for free on our website. So explore a1trading.com if you haven't already. It's a great free resource for you to hopefully learn some more about fundamental analysis. If you have questions, keep them coming. I've got a couple here that I want to get through. Thank you guys for submitting your questions, by the way. Appreciate that one. That was a great one. So Michael says he's been trading for less than 1 year. His goal right now is to become a funded trader, and says, do you integrate coding and software developing to your trading? That's an easy one. Absolutely, yes. So a primary tool that I use, the EdgeFinder, I know sometimes people think like I just pull this thing up because I'm trying to sell you a copy. Full transparency and disclosure, I am also trying to sell you a copy because I think it's a great software and I think more fundamentalists should use it. That being said, even if you don't use it, and even if I didn't use it myself or didn't have it myself, the underlying things that I'm doing within the EdgeFinder, right, tracking all this data to make decisions, absolutely are coding integrated into my trading approach, right? All the EdgeFinder is it's a tool that saves tremendous amounts of time. Instead of you having to go, get these labor statistics yourself, the EdgeFinder is pulling it all in, and you as the trader are just focused on what it's telling you, not focused on going and scraping data and writing everything down and putting it into spreadsheets for, 4 hours a day, right? The EdgeFinder allows you to get back to the trading, which is why I use it too, right? It allows me to focus on my trading without having to focus so much on data collection, data mining, going and finding this stuff myself, reading articles all day. Like it takes all of that out of the equation and simply allows me to use, again, as you asked, the question you asked was, related to coding and software developing. Do you use that in your trading every single day, right? That's what the EdgeFinder, it's pretty much what the EdgeFinder is all about, is taking software and integrating it into what we're doing. Okay, if you have questions, like I said, keep them coming. I've got 2 more, so if you add another one, you'll be third on the list. Another question here from Blessing says, how long you've been trading? 3+ years. Their primary goal right now is to learn more about fundamental analysis. And they say, what's the difference between Flash and ISM PMI numbers? That's a great question. They are 2 different entities that produce purchasing managers index numbers. They have slightly different ways of collecting that data. I find both to be useful. Personally, I focus a little bit more on the ISM PMI numbers, but the idea is the same. So within the EdgeFinder, if you go to our economic growth and you take a look at services PMI, for example, this is ISM. And I believe we have that written about somewhere, but you can read on this if you have an EdgeFinder copy. If you do not have an EdgeFinder copy and you'd like to learn more about the PMIs, like I said, head over to a1trading.com, and under your economic growth data, I believe is where it's at. Yep. So go to a1trading.com/edgefinder-tour, scroll down to economic growth data, and there is your PMI purchasing managers index in-depth explanations. We also have retail sales, consumer confidence. We've got guides on all of these things in case you are, wondering and wanting to learn about them. Like I said, even if you don't buy the EdgeFinder, this is still a great resource for you to go through data and understand what it's actually telling you about the markets. Okay, let's see if we could drop that link another time. I know I keep asking you to do it, Chandler, but I just want to keep it. Maybe we could pin it on YouTube or something. That might be the easier way to do it. Like pin it in the chat on YouTube or something. Anyways, another question from Migris, trading 1 to 3 years. Primary goal right now is in trading, improve trading psychology. And let's see. I think we already did this one. Hold on. Let me double check. I believe. Yep, we already did that one. Okay, cool. Well, thank you guys for the questions. If anybody has additional ones, I'll check back on it in a minute or so. But let's just take a little bit of an updated look, see what is moving here this morning. You've got euro, you've got pound, dollar yen, and a pretty common sentiment that I've been hearing a lot on the channel and going through myself is there's a lot of stuff here that looks pretty good in terms of ideas or trades, but a lot of charts are just not pulling back. Does anybody have that same sentiment? Anybody feeling the same way this week? You have, dollar yen looks like a great bearish trend. You've got pound dollar, in my view, looking like we've got a solid upward trend here, looks really strong. You've got euro dollar looking good. I mean, there's trades out here that look excellent. And you know what even makes it more tempting for me is that, a lot of the fundamentals look great here. If I just isolate currency pairs for a second, we take a look at category, we go major currency pairs for a moment. Look at this. I mean, you've got euro dollar, pound dollar, Kiwi dollar, Aussie dollar. All of those charts right now look really good for possible trades, but there's just little to no pullbacks for me to get in on anything. So, yeah. Lee says it's golden indices are closed. Although the Forex market is open, spreads are wider and thin liquidity, so nothing to do today other than to learn. Yeah, and I think that's if you are somebody who is really out there trying to make a difference in their trading, take advantage of a day like this. I'm telling you what, I was ranting about this when I first got on. Just because you have the markets closed does not mean you can't make full advantage of today, especially if you're somebody who has like the day off for today. Oh my gosh, this is an opportunity to get ahead, right? Just because the markets are closed does not mean that you just, if you really want to make it in trading, that's where you put in the work, right? I have like really good memories of like in college, like Saturday morning. I would get up so excited because I was like, okay, yes, I don't have school, and I just can get up at I would get up at like 7 a.m. or 8 a.m. and I would just go straight to like back testing. Like I would like make coffee, or I would set up my desk, and I would literally just have a pen and paper like I do today, right? Pen and paper next to me, and I would just go at it. I would just test and write code and write expert advisors. This was, that was a time where I learned a lot of stuff, just basically dedicating, Saturdays were like that's the thing. A lot of times people think like I've got to learn trading when the markets are open. Like they feel like I've got to jump in, I've got to be involved, I got to be trading actively. That's how I'm going to learn. When in reality, I think the best way to learn is when the market's closed. In fact, another thing that I've done for a long time and continue to want to get better at, right, is playing chess, right? Like I've played chess like off and on for a number of years. One thing I know, because I keep hearing all the chess content creators say it, is that if you really want to get better at chess, you have to analyze your games. And I know that, and I hear that, and I absolutely know they're correct. But I also know, if I'm being really honest, I don't want it bad enough. I just don't. And again, this is like reflective for many traders out there who, if they're very brutally honest with themselves, they might feel the same way of what I'm explaining with chess, right? So I like playing chess. I don't absolutely love playing chess. I really enjoy playing it. It is a good mind game. I enjoy it. I find it entertaining. I find it fun and thought provoking. But I wouldn't say I know what I need to do in order to become a great chess player. Like I'm a okay chess player. For those who know about chess, my rating is about 1200. When I'm really playing, like really getting into it, playing a lot, like 1250. And I think the highest I ever got was like 1300. So that's my ELO, if you know anything about chess. The point is, I also know, I know how to get to 1500, 1600 in chess. I know how to get to be a better chess player. But am I willing to do those things? If I'm being brutally honest, Nope, I'm not. Because I know what I need to do. In chess, I need to, after I play games, go back and analyze every move and understand what should I have done in this situation? What are things I need to consider, right? What was my opponent doing in this situation? Was I too focused on moving my rooks or, getting my knights on the board or pawns out there without actually thinking about pawn structure? Like there's all this stuff. Like I know what I need to do in order to become a better chess player. So let me ask in the audience just some feedback really quick. Does anybody feel that way about trading right now? Like type yes or put a 1 in the chat if you're like, honestly, that's kind of where I am with trading. Like I'm interested, I'm watching a lot of content, I find this stuff entertaining, I find this stuff very curious, but I'm not all in yet. If that's you, type yes. Just like throw it out there. Say that's me. Like I'm willing to admit that. And if that's not you, like if you're like, no, I'm all in, then awesome. Let's talk about what all in actually means. Okay. So if you are somebody out there who is like, I'm one of those people, like I like trading, I'm really interested in it, but I haven't gone all in. Trading is one of there's a couple things in my life that I've gone like all in on, like content creation, like my business and my trading. And like obviously like my relationships, but I think that's a little bit different. I'm talking about like things that you're looking to progress in. So if you are somebody who is truly all in on trading, type yes in the chat. So if you are somebody who, no, that's me, I am all in on trading, I'm spending tons of time. But let's talk about what all in trading actually means. Okay. You ready? You want to talk about all in on trading? All in on trading means that if you have a day off, you're back testing. If you are all in trading, that means that when you get a bonus from work or you have a really good, let's say, I don't know, if you're a salesperson, you get a commission check that's bigger than usual, or you get a tax refund, or you get that money is going into your trading journey. I'm not necessarily saying it's going into a trading account right away. I'm saying maybe it's going into back testing software. Maybe you're using it as a write-off in your trading business to buy the EdgeFinder. That was kind of a sneaky plug, right? That was pretty good. Or maybe you're buying a course from somebody you like. I don't sell a course, but if you like someone else's content, you want to learn from them, maybe a mentorship program, or maybe you're just investing it into your trading account. Maybe you're buying a prop firm account. The point is this pre-recorded? Nope. We're just talking trading today because markets are quiet for the dollar, for gold and indices, and kind of Forex is open, but it's a little bit quiet. But this is an important workshop day. We're doing a little bit of a workshop. We'll call that what we're talking about. So if you are all in on trading, it means that when you have extra money, you're not blowing it, spending it on, things that are for fun. If you are really all in, you're making some sacrifices. You have extra time, you're back testing. You have extra money, you're investing, whether it be into your accounts, into your education, into whatever. That's what all in trading means. You know what else all in trading looks like? If you really want to make trading a thing for you, you're investing your time, you're investing your money, and you're going back and doing the hard work of looking at past trades and understanding, what did I do here? Did I stick to the rules here? Like once you have a back tested system, it doesn't stop there. You look at what your activity has been in the markets and you analyze, right? If you have a specific trading question for me, I am pulling them up and answering them on stream today. If you would like to ask your question, please feel free to drop one using the link that we're about to drop in the chat. You can also find it in the description. And there's another place I want to put this. I want to put it on the website. Like this is not a current link on the site, but if you did like a1trading.com/ask, I think we should do that. So I'm going to actually just write that down, /ask. I feel like that would be an easy URL to put in. Anyways, if you have questions, please feel free to ask them. Help me out. help me keep the stream flowing. If you have a burning question, if you're like, I struggle with this or I struggle with that, and you want the stream to be talked about that, there's no questions waiting right now. So actually, wait, yes, there is. There's one. Okay, no, this is a fair question. And I'm going to try not to, I'm not going to flame you, although I want to. OT says, I've been trading for less than 1 year. Their goal right now is to learn more about fundamental analysis. And they don't currently have the EdgeFinder. They're interested in getting it in the future, but says, how do you conduct fundamental analysis in Forex if you don't have the EdgeFinder? When I can afford it, I'm definitely buying it. So this is a fair question. And I know there's a lot of people in the audience who are in this situation. First and foremost thing I'll say is that if you are somebody who you recognize, what's up, OT? Thank you for your question. So here's the thing. If you, first of all, recognize you're like, I do want to get the EdgeFinder and I see the value, then awesome. You're on the same page as a lot of us. A lot of us, like, and I know it sounds like a sales pitch, but straight up, like if you recognize the hard work we're putting into, build tools like this, if you're like, I want that, I just can't afford it right now, but you still want to get into fundamental analysis, the first thing you should know is that we do offer payment plans and we can split it up for you. If you'd like to split it up, if you need we're doing our biggest discount of the year right now. It's currently 45% off for live stream viewers. If you need to split that up, you want to hear about the 45% off, here's your quick sales plug. We'll drop the link in the chat to where you can chat directly to our support team who can get you set up with the EdgeFinder for our lowest cost of the year. If you are like on the sidelines, there's not going to be a lower price this year. So that is your opportunity. Click this link, send us a direct message. That being said, if you have nothing, right, you're like, oh, I have no money. I can't spend even a dime on anything right now. I just want to learn fundamental analysis. Great. That's fine. Like I'm going to just quickly say that, I think that you should carefully consider trading, because if you don't have any money, trading is a dangerous venture, because people who are very low on funds, I recognize that you wish you had more funds. Maybe you just are not in that situation. That's totally cool. But trading is a dangerous place for people who have really small accounts, because most, like, trading just takes money. It's unfortunately the reality. Like if you're trading with like $50, I just don't know that that's a sustainable way to approach, because commissions and spreads and even 0.01 lots on a Forex brokerage, or one contract or one mini contract or one share of stock, is still a lot of money within a tiny account like that. So I really don't think you can properly manage risk and properly use the tool set that I know works in the long term. I can't really say to people who have like $100 in their account that trading is for them, because it's just, I don't know of a way to trade profitably with so little capital. You need capital in order to position size properly, to put a stop loss. Like if you're trading the euro, just a quick example, let's say that you're trading the euro at this level, and you are like, okay, I'm trading I don't really personally love trading like the 15-minute or lower time frames. If you do that, great, that's your thing, and that's perfectly fine. But I find those time frames to be very hard to trade. So if I'm telling you brutally honestly, like how I trade the market, like I like to look at the 4-hour, the daily, the 1-hour chart. I like to look at that range. If you're even looking at the 1-hour time frame, right? And you're like, let's just say you like this area and you want to put a trade on at this level. If you only have $50 in the account, even a 0.01 lot size, right? Even a 0.01 lot, if you were to put your stop loss here, is still going to be, if you have $50 in an account, that stop loss is going to be like way too much of your portfolio. It's going to be like a minus 3 to 5% of your portfolio. And I'm telling you very honestly, I don't know how to trade profitably taking 3 to 5% risk per trade. I'd blow my account. So I'm telling you what would happen to me. I've been doing this for a long time. I would still not be able to trade profitably. If I had a $50 account, could I turn it to 150? Maybe. Could I do it, turn it to 100? Maybe. But there's a very strong probability I'm going to turn 50 into 0. There's a very strong chance that's going to happen. So I don't really know how to trade a tiny account. I would encourage you, if you are in that situation, I'm not trying to shame you or make you feel bad, or I'm just telling you the truth. And I think the better approach is to wait until you have more capital. And in the meantime, demo trade. That's my honest opinion. If you don't have any capital, demo trade and learn this stuff and ask yourself, do you really love learning about the markets, or are you trying to make money? If you're trying to make money, move on from trading. It's not a great place to make money when you don't have any capital to bring to the table. It's a great place to scale up money over time, slowly, but it's not great if you don't have capital. There's probably better things you could be doing. If you love learning about markets and you still have a small trading account, demo accounts, watch videos, back test, learn things about the markets, and maybe someday work towards getting funded or things like that. Hopefully that makes sense. You broke my heart. I'm sorry. Joking. Okay, all good. No, I'm just, I'm just telling you, if you gave me $100 account and said trade gold and turn this into as much as possible, I could give you a valiant effort, but there's a good chance that $100 is going to zero. Because sometimes I have losing streaks. I can't control when I have losing streaks. And if I'm working with $100, one losing streak and I'm done. It's over. Right? If I have $10,000 in an account and I'm trading very tiny size, there's a good chance that I can turn that $10,000 into more over time, slowly and steadily. But $100, I can't do it. I could not do that. I would likely blow the account. I did videos like that in the past for fun. Sometimes I would, and it was purely gambling. Like I don't know how to trade $100 account on minimum lot sizes without it being completely gambling. So let's check what kind of questions we have. If we had any more come in, thank you very much for the question, by the way. I hope that helped. We got more questions. Thank you, guys. Wow. Our questions are not coming in perfectly well. You can see they're not coming in order. And that is really throwing me off. Okay, we've got good questions now. Thank you, guys. I'm going to try and make sure I answer everybody's questions, but as you can see, like they're coming in out of order because they're coming in like randomly. So I need to organize this somehow, maybe like add a timestamp for when they get. That's what I need to do. I need to add time. Can I just try that really quick? Chandler, if you could roll a quick break for me, guys. I just want to see if I can reorganize these, and it might just take me like 1 minute. So we'll roll a quick break. Stick around with me. I'm going to answer some questions. We'll be right back just after this. We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back to the show. All right, guys, I got it. I was able to get the timestamps for when you guys put your questions in right here. Also, I saw a couple people ask some great questions in the chat. Trust me, I'm not ignoring you. It's just a lot easier for me to answer questions this way because they stay in one spot rather than the chat. It's scrolling, so I can't catch everybody's question. If you have questions, please feel free to drop them. I'm having a lot of fun doing this, and I hope that you guys are enjoying it. If you are enjoying the stream, make sure to hit that thumbs up button. Just help us out. Keep the stream rolling here. We're doing some educational content, having some discussions today, and I've been loving doing these questions. I keep them rolling, man. Let's see if we can change some lives here. Let's get on the right track together. Anyways, next question is from Ashutosh. Hopefully I said your name correctly, and I apologize if I did not. How long you've been trading? They've been trading for 1 to 3 years. They don't own any of our software, but are interested. Hey, hit us up. We'll be happy to help you. And their question is, what's your view on heavy volume coming in today on FX pairs, despite it being a bank holiday in multiple countries? So I'm curious where you're seeing like volume, because volume in FX is a tricky topic, because since FX is decentralized, there's not like one exchange. It's really hard to track how much volume is happening because there's many different brokerages offering it. And that being said, in terms of market movement, I'd say we're really quiet today on FX. So I don't really see where you're seeing the volume, but I'd be curious to hear back from you. So I'm just going to move on to the next question, but thank you for submitting that. What's up, Bashy? Bashy's a regular stream supporter. Appreciate you on that. I've been trading for less than 1 year. The goal is to become a funded trader, and I am the minute one GOAT. All right, nice. Thanks for sharing. Charles, next question says they've been trading for less than 1 year. They're looking to find a profitable trading strategy. That's their primary goal right now. And their trading question is that the dollar yen has been in a 1 hour range for the past few days. What is your take? Why is it not really moving? Tough to decide to hold and pay swaps or just close the trade. Yeah, no, that's a fair question, especially if you're on the short side of dollar yen. You know as well as I do, man, those swaps are costly. So if we take a look at the 1 hour chart, we're stuck in a range. And, here's the thing, right? Markets will do this. They'll have these periods of volatility expansion, and then they'll dry up, right? And then they'll expand, and then they'll dry up, right? The last 2 weeks or so has been a really strong moving period for dollar yen. But I think it's normal that you get volatility index or volatility kind of moving with the volatility index, the VIX, right? So the VIX had a spike to the upside, and that caused pretty much everything, stocks, the yen pairs, the euro, gold, everything to move like crazy. And now it's been declining. So we would expect that with a declining VIX, way to read this chart is to say, if this thing is moving lower, charts are likely to move less, at least for now. If that thing spikes back up, charts are going to be moving a lot more, pretty much across the board. So I actually did a video at one point about, for people who are looking to get funded, I actually discussed this topic in depth, this idea that if you're looking to get funded, you may want to consider testing this, of course, with your own trading strategy and spending some time back testing, but you may want to consider exploring what it would look like if you only traded during periods of higher volatility, if you're somebody who looks for, big moves in the market. Because if volatility is contracting, it can cause, charts to go sideways, and that can be really frustrating. And especially if you're holding something like dollar yen shorts, where it's costing you a lot to hold that overnight, that is the negative of this pair. You flip it around, if you're bullish on dollar yen, let's just say as an example, and you're holding this thing, you don't care if it's going sideways because you're collecting positive swaps. Yield or cost, like debit or credits through the form of swaps or dividends or short borrowing. If you're short a stock or something, it costs you overnight. Or if you're an options trader, if you're short options, you collect over time. If you're long options, you pay over time in the form of theta decay, right? There's so much in markets to understand. And if any of that just sounded fancy or jargon, that's because it is, and I'm trying to show off a little bit. But no, but whatever you are thinking, you do have to think about your holding costs. Like if you're holding dollar yen short, yeah, it's costly. You just need to consider that for your own trading strategy. I can't tell you the right answer because, if you close it now and it drops tomorrow, you'll be like, dang, what happened? Or drops on Monday, right? But ask yourself, within your trading rules, within your trading strategy, am I supposed to be closing here? Am I supposed to be holding here? And if you don't have an answer to that, back to the drawing boards, do some back testing. Okay. So next question is from Shirls. Shirls been trading for 1 to 3 years. Their primary goal right now is to learn more about fundamental analysis. They're interested in the EdgeFinder or other products from us. So appreciate that. Hit us up if you have any questions about those tools. And says, Nick, what is your max drawdown per week? That's an interesting question. So I don't have a max drawdown per week. So because I'm a swing trader, I oftentimes hold trades for multiple days, or even multiple weeks. And on some of my position trades, multiple months often. So in terms of a max drawdown, there's a couple ways I guess I could answer that. If you're talking about like how many losing trades will I take in a day, almost never more than two, like two new trades. If I just like lose a trade and I enter a second and I lose it again, I'm probably done for the day. Maybe three, but it would depend on like how I'm feeling. Cause I'm not gonna lie, like losing two trades in a row is annoying. So, and it happens, right? It happens. When it happens to me, it's especially annoying because I'm a swing trader. So I had to be like dead wrong to get two losses in a day. Like two new entries, two new losses on the same day for me means I was just taking some bad trades or like taking bad entries, not necessarily big trades, right? So it's not devastating losses, small losses, but still psychologically it's annoying to take two stop outs in the same day for me as a swing trader. So that's like a daily loss kind of limit. I would say two. In terms of like a max drawdown perspective, it depends which like I have multiple accounts. The primary one that I use, 40%, which is aggressive, but it's mostly a long-term portfolio that I'm looking to grow through trading and through position trading and investing. So, but that's not necessarily in the course of a week. That's in the course of, it could be months, and I, just have a losing streak that I fight it through, and I'm just continuously dealing with it. But good question. Thank you for the question. We have more questions coming in, so thank you guys for those. If you have one you'd like to add to the list, please feel free to do so by using the link in the description down below to ask your question. And just to plug really quick, as I mentioned earlier, the EdgeFinder sale is ending soon. It's our biggest discount that we do all year long, and the EdgeFinder can currently be gotten access to for 45% off. I also answered a question earlier for a gentleman who wants the EdgeFinder, but is waiting for, or not waiting, but waiting to build up their own capital before they can afford to buy the tool. Totally cool, not pressuring you at all, but we do also offer installments, and I just don't want people to miss the discount. So what we can do here is we can do the 45% off discounted price, but like split into 2 or 3 payments. So that is an available option within, when you're speaking to our support team. If that's something that would help you to get the access today and start using it and start practicing it, especially with this long weekend that many traders have, I would encourage you to do it. Like explore the options, see if it's right for you. You can do so by chatting with us directly on the site, a1trading.com. So Alan has a question for us. Been trading for 3+ years, owns the EdgeFinder. I know Alan is a proud EdgeFinder user, and he's killing it with it. I've been watching your videos. It's been awesome, man. Can you please go into on how trading seems like a $0 barrier to entry, but in reality, you need experience, discretion, software tools, capital to have a fighting chance? No, I mean, Alan, that's a great question. Trading is like perceived to be this kind of thing where like anybody can do it, anybody can get a side income going, kind of like MLMs. You know what I mean? Like a lot of MLMs, they'll be like, oh, come on in, it's easy. I'm a stay-at-home parent or a part-time worker, and I just do this a couple hours a day, and I make $5,000, $10,000 extra a month. Like that is the same thing as trading, where there's like this pitch that's total nonsense, that it's easy and that with a couple hours of work per day or per week, you can start making a bunch of side income. It's just absolutely nonsense. Trading is a grind. And I, most traders need like 4+ years to really get to a point where, after a ton of effort, ton of investment, both time, money, and energy, they start to get to the point where they make a little bit of profit. But that's the reality. So you need that reality check, I think, if you're getting into trading, and I do it as often as I can in my videos without trying to totally sound like a hater or a naysayer. I know sometimes I come across that way, but I'm really just trying to warn people that this is a commitment to get to a point where, you get to a point where you're profitable. Is such a long road, and it's so much longer than you think it's going to be. But if you accept that, the fascinating part is that if you truly accept that, somehow the road gets shorter because you stop chasing all the shiny objects. If you accept this is a long journey for me and I'm ready and I'm locked in and I'm willing and I'm not looking to make a ton of profit tomorrow, if that's you, you've got a cool opportunity here to shortcut the whole process. Amazingly, by accepting that it's a long process, you can actually short the process because you stop chasing shiny objects and trying to make 10% per month and 20% per month. And you stop doing all that nonsense and you start approaching it like an advanced savings account that's a long-term, goal for you. So yeah, no, it's, and again, it's not free to join trading. It's absolutely not. It's not for people who have very low amounts of income or amounts of money. I hate to say it, but it's the truth, because you need to invest a ton of time. You need capital to make trading worthwhile. Most people would greatly benefit from investing in a TradingView Pro account, for example, replay mode or whatever. I think that's only available to the premium version of TradingView. I have the pro version of, like, I have to be real with you guys. I don't pay for TradingView. They give it to me for free because I'm a little bit of a celebrity. I'm just kidding. I'm totally not. But they give it to me for free. But even if I didn't have it for free, 100%, I'd be spending money on TradingView for the backtesting features, for the advanced charting. It's a wonderful software. Like, game recognizes game. We build software tools. I recognize that TradingView is kind of the GOAT in terms of trading software companies. They are a beast mode. And I learned a lot from just studying what they do and how they market and how they do stuff. Anyways, my point is, yeah, the reality is you can probably go a lot further if you have a little bit of budget dedicated to education, dedicated to prop firms, dedicated to software. That's going to take you a long way in your trading if you're serious about this stuff. Everybody loves to glorify the idea of you can learn to trade for free and with $50 in your account. I don't agree with that. I think you could do it, but it's kind of like walking into a gym you've never touched weights before and just imagining you're going to be able to figure out how to work out, as opposed to hiring a personal trainer. Personal trainer is going to take you in 1 year what would take you 10 years if you just walked into a gym with no experience. So yeah. Anyways, let's keep going with the questions. I hear we have more questions coming. I think we had one. Sorry, I'm not reading the chat as frequently. I think we had one from Jason. Good to see Jason. Is there a way to refresh? I made a question at 9:42 and 9:58. Yeah, let's refresh. Sorry. Wow, you guys are loading up our questions here. Thank you. Interesting. Jason, there it is. Okay. After Trump's tariff announcement, the indices dropped sharply. Why has the Russell 2000 taken such a heavy hit? Tariffs usually promote domestic production, which should benefit small cap companies. I see tariffs as a positive for small caps. Convince me otherwise. Also, why has copper's recovery been more explosive than the broader indices? It's a good question. Jason, you're bringing the heat with that one. That's a good one. Gotta stretch for this one. Onshoring is not something that will happen overnight. It will happen over many years. So even if the Trump administration is successful in their goal to bring back manufacturing to the United States, the likelihood that that's going to immediately occur, it's not going to immediately occur. It's going to take a long time to build stuff, to build infrastructure, to onshore production in the United States. So when it comes to small caps, specifically small companies, there's a couple things that are really negatively impacting small caps. Inflation is the concern, right? If there's a bump to inflation from tariffs, which is everybody talking about that, is up for debate whether or not that will lead to sustained inflation or if it will lead to a one-time bump in inflation. I don't really have a really strong opinion on that, and I truly don't know. And neither does the Fed. But there's a good chance that a bump in prices will keep the Fed from cutting rates for a while. That's a possibility. And if the Fed doesn't cut rates, small caps, which are most negatively impacted by borrowing costs being high, it keeps them really smothered, right? Small caps, a lot of those companies are still growing. They need to borrow more money, and that those higher interest rates, that's a tougher environment for them. So the other thing is the markets have been pretty uniformly moving lower during all of that stuff. So, if people are grabbing for cash and trying to get out of the markets in general, true fear in markets typically causes everything to sell at once. So, yeah. Andre says, thanks for the question, by the way, and thanks to everybody who's asking questions. I'm now getting way more than I can answer, so I'm gonna try and go quick. Andre says he's been trading for 3+ years, trying to better understand the EdgeFinder, and says in the EdgeFinder COT data, CAD is first in short, but in the graphics, dollar CAD is strong. Could you please explain why? Yeah, so let's just take a quick look at the dollar CAD. I'm gonna try and stay quick on this one. Let's go to COT data. So the Canadian dollar is, you said, the most shorted chart here, right? So on a longer term basis, let's take a look at the dollar CAD, right? And we can see here that is kind of playing out. I'm sorry. Right now, the dollar is getting hit. And as you pointed out, the CAD has actually been pretty, well, let's think about this, strong here recently, right? So the chart's going down. That's some CAD strength. If we take a look at some other CAD pairs like CAD yen, kind of flat here recently, but down the last year or so. CAD Swiss, which is a trade that I have on, which is not going super hot. I'm still just stuck in this drawdown. We can take a look at Euro CAD, right? Euro CAD. In this case, Euro is smoking the CAD, right? Pound CAD. In this case, pound is smoking the Canadian dollar. So it kind of depends which currency you're looking at. But the other thing too is that sometimes institutional positioning does not equate to right away the chart's moving in lockstep with the COT data. Right? Sometimes you get like this prolonged period. Like for example, we've seen this transition for the Japanese yen over the last few months, where we've seen Japanese yen get aggressively accumulated by institutional positioning in the Commitment of Traders History tab. For those who have the EdgeFinder, you've been keeping an eye on this maybe. I know I have. You can see this yellow line has been climbing as institutions have been accumulating the Japanese yen. If we did the same study for the Canadian dollar, you can see that they really kind of picked up their short position quite some time ago, going back as early as, this time last year. There was some net shorting going on here, or just selling that was going on, and has pretty much stayed consistently that way for some time. So perhaps institutional money sees a longer term scenario in which the Canadian dollar continues to stay weak, and against a lot of currencies, that's been the case, right? Let's take a look at like Aussie CAD. I'm curious about this one. This is, I know, an off currency, but yeah. So that one's Aussie's gotten hit hard. CAD. But even then, in this case, right, Aussie dollar down, CAD holding up okay recently, but the bigger picture has been kind of mixed for this one. But my point is, institutional money being positioned one way does not necessarily mean that price is going to snap in that direction. This is why, when we talk about this stuff, COT data is interesting and very important, but it's not the holy grail, and it's not, the easy example that people want it to be. Oftentimes, like people, sometimes think the COT data showing a bullishness or a bearishness for a certain asset means it's going to be moving perfectly in that direction, but it doesn't always move like that. Okay, thank you for the question. I'm still getting all sorts of mixed up on our order of questions, but let me just refresh this, see where we're at. If I miss your question, I truly apologize. I'm going to do my best to try and not miss them. Anas says they've been trading for 3+ years. Primary goal right now is to learn more about sentiment analysis. They don't currently own the EdgeFinder, but potentially interested in the future. And they asked the question, do you think gold can reach $4,000 per ounce by mid of 2025? Very possible. But I don't really make those types of predictions in my trading. So like, I could tell you, yeah, I could see it happening, right? But that would not, like, I think there's something you have to be careful about with this stuff. My results in the markets do not rely on me being able to say, I think gold's going to go to 4,000 by mid 2025. Could it happen? Sure, it could happen. Crazy stuff happens in markets all the time, especially in this world we're living in, right? There's a lot of craziness that occurs. So my important note here is for me, I trail stops for this very reason. I don't know how far gold wants to go. I still like the fundamental factors. I think it has plenty to go from a fundamentals perspective, but I let price ultimately tell me when it's time to get out of an idea or to stay in the trade. Maybe gold does go right to 4,000. Hopefully that answers your question. I just would encourage people to think less about making big predictions and just follow trends, follow macro, follow fundamentals. That's the biggest thing I can give you. Khaled says they've been trading for 3+ years. The primary goal right now is other. And they've got a bit of a long question. Let me see if I can get the gist of it without reading all of it. You collect statistics on trading pairs, for example, weekly gold highs and lows. 34.6% of the lows were put in on Mondays. Sounds like some seasonality stuff. Do you also use live data order flow besides A1, for example, bookmap, order book? So I don't use any of this stuff. I'm also not really a day trader, so I don't get into that stuff. Absolutely, seasonality plays a part in what I do. And then this is not a question, but could help your viewers. I'm going to skip this one just because I want to keep going on questions. So thank you for the full question. In terms of seasonality, I use it all the time. Seasonality, I specifically like to look at month-to-month seasonality for your favorite charts. So for example, if I'm going monthly seasonality and I'm looking at gold, for example, I've been really bullish in the last few months on gold because seasonality has suggested that this portion of the year should be a positive portion of the year. So far, we're 3 out of 4 correct on the months. All right, so I've been bullish all year long so far on the EdgeFinder for the most part. We've gotten bullish readings, which the EdgeFinder does consider seasonality in its scoring. And so what it says January, February, March, and April are all considered bullish expected months for gold. And it's a pretty significant outsized period for gold on the last 10-year historical average. So yes, seasonality is absolutely a thing I consider in my trading. And I would encourage way more traders to look into seasonality because people completely miss the powerful observable trends that you could be using right now in your trading to pick up on some of the common things that happen in markets over and over again. Not certainly and not every year, but seasonality month to month is something I absolutely use and would encourage people to look into. By the way, if you want to learn more about seasonality specifically, I do have some videos. Search up on YouTube, Trader Nick seasonality, if you'd like some information on that, or head over to our website, a1trading.com, under EdgeFinder tutorials. Right here, you can read about seasonality in more depth. And we do have some videos on this. There it is. There you go. So I'm just going to drop that link in the chat. If you are like, whoa, that seasonality stuff is cool. You and me both, man. That is one of the coolest things to me is seasonality and studying those observable trends. You can do so for free on our website really quick just by using the link I just dropped. Click the seasonality tab. All right, let's keep going. Another question here. Pull this up. By the way, I hope everybody's doing well who's just joining in. We got 429 people on a day that the market is pretty quiet. Thank you for all being here. If you could hit the thumbs up button. Clearly, are you guys enjoying this? If you're liking the questions, do me a favor. Just type yes in the chat. If this is something you want me to do more of, I'm exploring. I haven't done this on my channel for very long, but I recently started answering questions. I'm having fun doing them, but I want to know if you guys are enjoying them too. If you're like, yeah, or if you're like, nah, I'd rather just do charts. I mean, today's a great day to do this because the markets are kind of quiet. But yeah, let's keep going. Miola, I'm sorry if I said it wrong. How long you been trading? 1 to 3 years. Their trading primary goal right now is to improve their trading psychology. They don't own the EdgeFinder, but interested. And says, when we see the same strong movement in all markets, why does it happen? We see this in the 1 minute and 5 minute, all sectors, metals, crypto to futures. You ready? One word. Anybody know what I'm going to say? Why do all the markets start moving all at once one time? Fundamentals. Fundamentals are what move the market. If you get a big NFP report, if you get a big CPI report, if some negotiation between China and the US happens, or some escalation happens, Those are all fundamental forces that impact all markets, and they all move together all at once. Fundamentals are the reason the markets move. That's why we focus so heavily on them on this channel. Most people do not. Most people ignore fundamentals because they're hard. We do focus on fundamentals here because we know how important they are to the markets. So if you're ever watching and you see everything move on the 1 minute and 5 minute, something fundamentally happened. Something really important just hit. Alan, I'm going to take the other side of that. I know you're just kidding. Iqbal says the primary goal right now, he's been trading for 1 to 3 years. Primary goal is to find a profitable trading strategy. Interested in our software? Like I said, hit us up if you have any questions on our website, a1trading.com. Can you guide me to trade indices? If you want to learn to trade indices, I have a couple videos on that topic. Head over to my YouTube channel, go under playlists. I have a whole playlist dedicated to trading indices and some strategies there. Might be helpful to you. Jason has a question about learning about sentiment analysis. Been trading for 3+ years. Since April of 2021, gold has increased by a value of over 90%, while silver has risen only 27% during the same period. What factors make gold so much more valuable and appealing as an investment compared to silver? Well, when somebody is the winner of a race, do they get the silver medal or the gold one? Everybody wants the gold, right? Gold is the for some reason, for the last 5,000 years, the admiration of humans, right? We just love that gold. Silver is also really a beautiful metal. I think it's very cool. But that's beyond just that point. Gold is also just kind of locked in as the most safe haven kind of thing. Silver is just not quite that. Gold is just the more rare, the more valuable perceived and more rare item, right? Doesn't mean silver's not valuable, but silver also has unique characteristics in the sense that it is like gold is further on the safe haven side of things than silver, I would say. And silver is more on the industrial commodities list. Basically, people use it to build solar panels and planes and trains. But gold is like that. When you're scared, you grab your sack of gold before you go grab your sack of silver kind of thing, right? I think gold is it's just known, as Lee puts it, as the reserve asset. That being said, I own some silver, like physical silver, and I wish it would go up with gold, I actually thought it would by now have a little bit of a outperformance, but gold is the, here it goes. Gold is the king's money. Silver is for the peasants. Interesting. I don't know. There is an expression like that, but silver, I don't know, is for the peasants, but if you're calling me a peasant, like I'll take the silver. If you want to send me some silver, I'll be a peasant. I don't care. How boring would the trading world be without ICT? We need those guys. We need them for the entertainment. Let's be real. And hey, you know what? Who knows? Maybe some of them are actually doing well for themselves in their trading. That's awesome. But my goodness, they are a source of entertainment as well. Liban, I apologize if I said your name incorrectly. 3+ years. Primary goals to improve trading psychology. He said they've been trading since 2019, but still average only about a 10% return annually. What strategies or approaches would you recommend to consistently outperform the S&P 500? It's a good question. It's the holy grail question, really. How do you outperform the S&P 500? So, first of all, outperforming the S&P 500 is difficult. It really is. But it also depends what your goals are, right? If your goal is to beat the S&P 500 passively, the reality I think you have to kind of accept is like you've got to take more risk. Because people who are 100% allocated in the S&P 500 are taking a lot of risk. Like if your whole passive investing is just full ported into S&P 500, the S&P 500 could have a 10-year period where it's flat, or it could have a 3-year period where it's down. That's the other thing you have to think about. If you've been comparing your results to the S&P 500s in the last few years, it's been ridiculously hard to beat. If you can keep up a 10 to 15% gain per year in a period where the S&P 500 is flat or down, that's another way to outperform the S&P 500. You can outperform in many ways. You can outperform on the way up. How do you outperform the S&P 500 when the S&P is ripping higher? The answer is, in that situation, you probably want to be long, high growth stocks that are doing phenomenally well. That's how you would outperform on the way up. Or trading, in and out of the S&P 500 with maybe some leverage or margin. Again, I'm not a big proponent of that. I'm not telling you should do that. I'm just telling you that's like, if you want to beat the market when it's going up, you have to be further out on the risk curve. If you want to beat the market when the market's going down, you have to be more diversified, short the market, or trade other things. Like for me right now, this year, I have had a slightly profitable year to date. It's not a great year for me. It's not a terrible year for me, but the market itself is having a rough year. The market's down like 10, 11% or whatever. And my portfolio is up like 1 or 2. So the reason I say that is because like that context is really important for how you outperform. You can outperform on the way up, you can outperform on the way down, but there's no easy way, right? Refine your strategy, back test, spend the time, do the research, continuously improve, continuously find ways to refine your edge, and take risk where it counts, but take calculated risk. But it's a constant. I mean, I think about that every day. I think about how do I outperform the S&P 500 probably every day. It's not an easy thing to do. It's very hard. The other thing is you have to sometimes reevaluate like if you're somebody who's like, I'm not looking to take a bunch of risk and you want to beat the S&P 500, I think you might need to think about differently, like what your benchmark, quote unquote, is. For example, like if you're somebody who's like, I'm more risk adverse, maybe your goal shouldn't be to beat the S&P 500. Maybe your goal should simply be to beat it on a risk adjusted return rate, or consider trying to beat the S&P, the 60-40 portfolio, 60% stocks, 40% bonds. Like that's a more diversified defensive portfolio that maybe you can benchmark against. Just things to think about. NASDAQ 100 is closed. We are kind of doing more questions focused today, and there's still many questions. So thank you guys for being there, for being here and for asking your questions. Hold on. What's our live stream schedule looking like? I gotta see where we're at. Chris was supposed to be on. Is Chris coming today, Chandler? Haven't heard from Chris. Maybe he's not coming either because the market is closed. Yeah, maybe he's golfing today or something. All good. Okay, I'm gonna do 2 questions more. We're gonna save the rest of them for next stream. I apologize for that. I'm just gonna move on. I gotta get working on some other stuff today. It's been such a busy week. Anyways, I want that EdgeFinder soon, very soon. Don't miss the sale. I'm telling you what, if you're an EdgeFinder interested person, sale ends very soon. It's our biggest discount that we do all year long. It's 45% off, and we can split up the payment into 2 if that makes it easier for you. Like 1 month, you pay the first half, the second you do the other. If that's something that you would be interested in coordinating with our team, click the link being dropped in the chat to speak directly to our support staff. They can help organize something with you, work that out so that you can get EdgeFinder set up today. Okay. So let's do 1 more or 2 more. Daniel has been trading for less than 1 year. Goal is to find a profitable trading strategy. Do you own any software? They do. Awesome. Thank you for your support and for using our tools. Do you trail stops on Forex pairs or target previous structure as a take profit level? I get the concept of trailing stops on gold and indices as they commonly always go higher, but would you employ the same strategy for Forex? If a pair is at the bottom of a very long-term range, rebounds and expected to appreciate against other currencies. Yeah, so my exit for Forex, my strategy for Forex and indices and commodities is slightly different. With Forex, a more dollar cost averaging approach, and I look to take profits at key levels because the Forex market typically does this over long periods of time. Like it can trend for a while, but then long-term it chops back and forth. Pull up most currency pairs, and that is what the chart looks like on a long-term basis. Whereas, as you mentioned, this is like, the S&P 500 over the long term, it's trending higher. So just something to think about. I have two different exit styles. So instead of trailing stops on Forex, I usually just take profits on trades that I'm in and dollar cost average. And then on indices, I usually trail stops. Okay, Lucas has been trading for 1 to 3 years. Goal is to find a profitable strategy. Hey, Nick, I've been learning trading for about 3 to 4 years now. Since COVID, I'm going all in. All my time is in this, and I've sacrificed everything for it. Chose not to go to college and live with my parents, primarily with Elliott wave strategy and also changing fundamentals to it to have a full picture of Forex and commodity pairs. Although I've tried funded accounts and passed, it didn't work out for me over time, and it's been very difficult. Where some months are 50% in profit and then I have a long losing streak. I've been trying to figure out with different mentors, but I found it even more difficult to try and implement new strategies and unable to fully adopt it. I now have extensive knowledge about markets and the economy, but it feels like it's useless because I can't implement it in a profitable way. What should I do? I'm lost, honestly. And should I change strategies or just get through this and keep going? So, Lucas, this is very common, right? We get people asking questions like this all the time. I've really spent my time on this. I've really gone down so many paths, spent so much time trying to learn this stuff, and I feel stuck still. So, if that's you, the only thing that I think you can do is to take a hard look at what you're doing, take a hard look at your stats. Like if you use, like, for example, if you're a Forex trader, well, you mentioned trading Forex and currency pairs or commodities. If you're outside of the United States, try out my FX book, log your stats, and take a hard look at them. Where are you giving back losses? Where are you making the best gains? Try and optimize your stats a little bit. Like, do some journaling. I'm telling you, that stuff can be really good. Like, if you're reflective on it, take some time to back test. During your best periods, what were you doing? During your worst periods, what were you doing? Reflect, because at the end of the day, like, your answers to a lot of this stuff, like how do I improve my trading, they're in here. Like, if you're looking for some, kind of like easy answer, simple step, the only reality answer for you is that, like, it's in your own stats and your own back testing that you'll find the answers to these questions. So if you're like, I'm stuck, I don't know what strategy to use, well, have you back tested that system thoroughly? Is there results that you're seeing? Like, if your question to me today said, I have spent so much time back testing systems, demo trading, and forward testing. I've gone through the full process of finding a system, finding an edge, refining it, and testing in the markets, and then I'm still struggling, I'd say, okay, I feel like you've done that. But something tells me most people do not do that. Most people do not spend that time to truly throw their system against a back testing software for weeks on end and see what comes out of it. A lot of times it answers your question. Maybe I don't actually have an edge. Maybe I'm just throwing money at a system that doesn't have an edge. Right? So that's something to think about. You should only change strategies if you thoroughly back tested it and come to the conclusion this is not working. Right? Changing a strategy because you're going through a losing streak is a terrible mistake that many traders make over and over. They try a new strategy, it works for a little bit. Awesome, this is awesome, I'm doing this forever. And then when it starts having a losing streak, oh no, that doesn't work. There's no consistency. The consistency comes from back testing. So that's what I'd say. Hopefully that helps. I know it's a hard spot to be in, so I don't envy anybody I've been in that spot myself. I also, one of my most tough moments for me personally, just off the cuff, was when I was doing all that back testing in college, spending a ton of time doing that. I found several systems, several strategies that performed decently well, but I wasn't happy with them. What I mean by that is I'd find this system, this strategy, and I was like, wow, this is actually producing positive gain over the years, and it's growing the account. But I had this really depressing feeling one time. Well, for like a week, I almost quit trading because I realized I can't find systems and strategies that can consistently perform better than 20% per year. I couldn't find it. To this day, I don't try and do that. I don't try and do more than 20. Some years I have good years that are beyond 20%, but I don't try and average 34% per year. I average much less. But that moment was very depressing for me. I was like, wait, I can't find systems that don't blow up in my back testing if I'm going for 50% per year. Once I accepted that, my trading became profitable like shortly after. That was a groundbreaking moment. I back tested for so many hours. I programmed so many things to try and study the markets and to build systems and test them and run code on them. I finally found stuff that was producing profits, but I wasn't happy with the rate they were producing profits. Guess what? I was the problem. Those systems were great. Many of those same things I use to this day, right? The system wasn't broken. My psychology was broken. I wanted to make 50 to 100% per year. Second, I accepted, get 15, 20% per year, build your outside of trading income, scale it up. Trading became, I'm not going to say easy, but it became I saw the vision. Once I accepted that, I went from like deep depression in that moment. Like, I've spent so much time in this and I can't find systems that generate more than 20% on average per year. That depressed the heck out of me because I was like, I don't have $5 million to trade with. So how am I ever going to do this for a living? That depressed me for like a few weeks. I was like, I might be done with trading. Like, that's stupid. Like, I can't. So I understand that struggle. To one day getting to a point where I was like, wait, the math is still mathing if I do this long enough, because I love trading and I love learning about this stuff, and I'll be patient and I'll take the slow and steady route. And it was like a fire lit in me. I was like, oh, wait a second. All the lights came on at once. I get it. Slow and steady wins. People who run for the finish line hard in trading, they want to race to the finish line and just, they blow up. Slow and steady wins. It's the truth. That literally changed my life. When I recognized that, wait a second, the systems are not broken. I'm just rushing the process. That changed everything. So just something to think about. Okay, let's see. Can NAS 100 gap up Monday after Trump's latest statement about China reaching out for U.S. negotiations? It could, but last weekend we saw really good news. And then by Sunday, they'd thrown cold water on it, the administration. So it's just day in, day out headlines that can change things. So maybe, but also could be back down, you know. FXCM brokerage, periodic volume profile. Price been chopping heavy. I'm sorry, I'm not going to answer that question because I don't really fully understand it. Kaysiri, hopefully I said I didn't say your name right, and I apologize. Trading for less than 1 year. What is a basis point and what relevance does it have in the financial markets? So it's basically a fancy way of saying percentages. So if we're talking about 50 basis points, if the Fed is talking about cutting 50 basis points, all that actually means is cutting by 0.5%. It's just a fancy word. Just think 50 basis points is 0.5. What's the point of having multiple accounts? Great question. You can segment into different things. So like you could have, like, for example, a higher aggressive account where you're more aggressive, but it's a smaller amount of money. You could have a Forex account where you dedicate only your Forex trading. You could have crypto account. You can split up accounts for a personal organization mostly. Let's see. Pharaoh says they've been trading for 3+ years, looking to learn more about fundamental analysis. What is the best way to learn fundamentals and how to use fundamentals with technicals to trade? Great question, Pharaoh. Cool name, by the way. Combining fundamentals and technicals, for me, simplest way to explain that would just be to use our tool that we do that exact concept. So if I go to top setups, algorithms, top setups, right? This is taking a look at economic data prints for our various economies, technical reads like seasonality and momentum in the form of a trend calculation that we have, and sentiment. So if I get euro dollar as a bullish reading on the EdgeFinder, what does that mean? That means that most of the economic data and or sentiment data and technical data are kind of leaning bullish for this currency pair within the EdgeFinder's calculations. You can review those calculations on our website, a1trading.com/edgefinder-tour. So if I get a euro dollar, for example, bullish reading, and I want to combine that with the technicals, for me, technicals are very simple. I just use support and resistance, and I use the daily and 4-hour charts. I also like to use fibs, but really technicals, I keep them simple. So I'm looking for a pullback and an EdgeFinder reading. That's pretty much it. Looking for a pullback. EdgeFinder reading basically is a proxy for a fundamental analysis reading that's positive, right? So I'm looking for this, and I'd probably look to trade that chart. So that's pretty much it. That's what the EdgeFinder does. The EdgeFinder helps you string the two together, technicals and fundamentals, keeps it really simple. That is, like I said, that's why it's our top selling product. There's a lot of people who use this and have benefited from incorporating fundamentals into their trading without having a PhD in economics, right? You understand, many people in this audience right now, they're like, I understand that fundamentals are important, but I need something to help me understand them a little bit better because I'm not going to spend, not everybody has, I do this all day long, every single day to know what I know about fundamentals, and I still have so much to learn. So it's a huge learning curve to economics, right? So a tool like this, developed by myself and the team that I have here, we help bridge that gap. That's the service that we provide to traders who want to trade with fundamental analysis. That's what we do with the tools that we build. If you want to learn more about fundamentals and you don't want to buy the EdgeFinder, totally cool. I'd encourage you to explore our free playlists on YouTube on my channel. You can go to Trader Nick on YouTube, go to my playlist section, search up the Macro Fundamentals Explained playlist, and there's videos in there that might really genuinely be helpful to you, even if you don't have the EdgeFinder. So hopefully that helps you. If you do want the EdgeFinder, there's no better time than the entire year to get a copy today. I'm not kidding. We're doing 45% off for a limited time. It's our biggest discount that we do all year long. If you want access to the EdgeFinder for that discount, do not miss that opportunity. If you asked more questions, I apologize. That's gonna be it for me today. I've been on the stream for a while, so I'm gonna hop off and get on to some other things today. Don't miss this opportunity. If you are an EdgeFinder fan, you don't have a copy yet, now's your chance to pick it up for the lowest cost all year long. Click this link to send a direct message to our support team, and they can get you set up with a copy for a low price. That's it, guys. Thank you very much for the questions. I really appreciate it. I hope that was helpful to some people. Hopefully, took something away from this stream. I know I did. I love having these conversations, and I plan on doing some more of them in the future with you guys. So thank you for being here. Have a great rest of your day. Have a nice weekend. And for those who celebrate, happy Easter on Sunday. And we'll see you guys back next week. Thanks.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.